Hello everyone, welcome to my channel. My name is Benjamin, and for those of you who know me, I'm actually the Buffett investor. And so in today's episode, I'd like to talk to everyone regarding about how you can actually do passive investing, and that is also using the method that is actually recommended by Warren Buffett himself, and that is index investing. Right, so let's begin. I think we talk a little bit about what's index investing first. Right, so for index investing, pretty much you are buying into a an index fund that is actually tracking basically a basket of stocks, right? Essentially that. So depending on whether you choose example index that's only tracking like the S&P 500, so like the top 500 stocks in US, or you also could be tracking like like the total world market index as well. And sometimes index also can be split by countries also, by example like the China index, or is it the India index, or some of you is Asia, what excluding Japan, things like that. But for today, I think what I will actually be recommending is in terms of more of the US related kind of index fund. And one good way to actually buy them, because sometimes when you buy the actual index, it can be very expensive. So where our advice is to actually buy the electronic traded fund. That's like ETFs, right? And you can actually get them off any from any brokerage, right? So for US ETF that we're talking about, most that actually I will talk about is always the S&P 500 or even the Nasdaq 100. Right, and so of course, I've been seeing in some forums, some of them they actually recommended, hey Ben, we should actually go for the Vanguard, I think is it all world, index. So I think the code for that is actually VWRD, right? And so I mean this is the index that they're actually recommending, all world market versus in terms of like the S&P 500 index. So I went in, I was thinking, okay, I just wanted to go inside and check it out as well. So when I went to morningstar.com, this is a very powerful website that I was sharing. I went to type this in as well. So depending on your risk appetite, if you are to actually buy into the VWRD, I click onto the performance. Under the performance tab, you could see that in the 5 years, right, the past 5 years of results, it only generated only about 6.5%. I mean, okay, about 6.5%, it's still decent. I'm not saying that it's bad or anything, because also again, depending on everyone, what is your retirement goals and your end objectives, right? 6.5%, for a person who doesn't know about investing, I think that's also quite good and commendable, right? So it could be worth a lot. At the same time, I also urge and encourage, for you to go and also Google, in terms of the S&P 500 ETF as well on morningstar.com, right? And you can actually check out this one. Okay, in fact, if you go and Google online, there are many different kinds of S&P 500. So, there's example, I think the one that I'm sharing, you can actually look by the one by Vanguard, or example, in this case, I'm actually recommending this is by the iShare Core S&P 500 also ETF. So the code for it is CSPX. So this is just one of those codes that you can actually find, right? And if you actually go and Google and check out what is the past 5 years returns on the the iShare Core S&P 500, you will see that it is almost 10.6 or I think 10.5% returns. So I mean, you just look at that over the last 5 years, in terms of the S&P 500 ETF generating about, let's say, 10% versus the all world market, right, index that I think some of them in the forums they're talking about, that is about 6.5%, right? But again, having said that, both of those ETFs has its its merits. Again, I will leave it up to, I think, you as also the audience. I mean, basically depending on what your retirement goal and your objective, you can actually choose into different kinds of ETF. Again, of course, having said that, S&P 500 is only buying to a basket of 500 stocks, so naturally, you're only diversifying the 500, right? So of course, if you're talking about in terms of risk, the risk versus, let's say, the all-time market, right? All world's market, that would be actually even more greater diversified, because you're going to all markets, right? But again, end of the day, going back to what Warren Buffett was sharing, is that again, diversification normally is only against, is a protection against ignorance. So I think do your due diligence. Do check out whether is your risk appetite more towards the S&P 500 or also the all world's market. Okay, alright, so I hope you have gained some massive value in today's video. I'll see you in the next one. Take care.